Today, Australia and the Biden factor. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest posts covering finance and property news with a distinctively Australian flavour. Well, the political kaleidoscope is turning, and it's being driven predominantly by Biden's new policy direction in the US, and it's having a significant impact here in Australia. Now, the Morrison government's decision to scrap Victoria's Belt and Road Initiative, the BRI, agreement with China, was based on Australia's new Foreign Relations Act, which says the Foreign Minister may, quote, ensure that arrangement entered by state or territory governments and associated entities are not negotiated, entered, or continue in operation where they adversely affect Australia's foreign relations or are inconsistent with Australia's foreign policy. In explaining her decision on Victoria's BRI agreement, Foreign Minister Marise Payne reiterated that it was about prioritising Australia's national interests and ensuring there is consistency across our foreign relations. The implication, of course, being that Victoria's BRI agreement was not in Australia's national interests. Yet the nature of the agreement itself, the controversy and debate surrounding it, and the overall trajectory of Australia-China relations suggest that the decision was as much performance as a practical defence of Australia's national interests. The nature of Victoria's BRI deal, contrary to some of the breathless commentary surrounding it, was largely a humdrum affair. The deal amounted to two non-legally binding Memorandums of Understanding, or MOUs, signed in October 2018 and October 2019. Those spoke vaguely of mutual commitments to promote practical cooperation of Chinese firms in Victorian infrastructure and Victorian firms in China and third-party markets. The first MOU received input from the Department of Foreign Affairs and Trade, or DFAT, while the second proceeded without federal oversight. Although Canberra was arguably right to be concerned that the second MOU proceeded without input from DFAT, the federal government's position on the Belt and Road Initiative was not definitively settled. It was sending, mixed messages. For instance, the then Trade Minister, Chi Chobo, represented Australia at China's Belt and Road Forum in Beijing in May 2017. And several months later, the federal government signed an MOU that committed to allowing Australian companies to cooperate with Beijing on BRI-related infrastructure projects in third-party countries. Prime Minister Scott Morrison himself also stated in an interview with a Chinese magazine in November 2018 that Australia welcomes the contribution the Belt and Road Initiative can make in meeting the infrastructure needs of the region, and we're keen to strengthen engagement with China in regional trade and infrastructure developments that align within the international standards of governance and transparency. Simultaneously, however, the Morrison government resisted signing a general Belt and Road MOU with Beijing and voiced concerns about the transparency and ultimate aims of the initiative. DFAT Secretary Francis Adamson noted in November 2017 that Canberra would think constructively yet clearly about the principles, rules and institutions that underpin an initiative such as Belt and Road, given its scale, ambition and complexity. And in the years since, Canberra's position on BRI has clearly been informed by its concerns about its geopolitical effects. The Morrison government also has a desire to develop alternative to Beijing's gambit in our immediate neighbourhood, such as signing on to the Blue Dot Network infrastructure investment program with the United States and Japan in November 2019. And more broadly, as relations with China have deteriorated rapidly a result of Beijing's wolf warrior diplomacy, concern about Chinese influence and interference in Australia, and Canberra's ill-fated pursuit of an independent inquiry into the origins of COVID-19, among other issues, it is unsurprising the federal government has now made use of its powers under the Australia Foreign Relations Act. The question remains, though, as to the ultimate effect of this latest development in Australia-China relations. Given that Victoria's BRI agreement was almost practically meaningless, the decision appears largely symbolic in nature. It's designed to demonstrate to the Australian public, the Chinese leadership, and Australia's allies that Canberra is holding firm in its pushback against Beijing. While Payne has asserted the government remains absolutely committed to our continuing engagement with China, it is difficult to see how this decision contributes to that goal. Indeed, Beijing predictably responded with anger, claiming the decision demonstrates the Morrison government has no sincerity in improving China-Australia relations. That, in fact, may precisely be the point as far as Canberra is concerned, given not only the current state of bilateral relations but also the emerging approach of the Biden administration. US President Joe Biden has already asserted that US-China relations will be defined by extreme competition, and his Secretary of State Antony Blinken has sparred with his Chinese counterpart on China's unfair economic practices, repression in Hong Kong and Xinjiang, and Beijing's regional assertiveness. Moreover, Biden has proclaimed that America is back and that it will work with allies and partners around the world, quote, to secure the peace and defend our shared values and advance our prosperity. These signals have been music to many ears in Canberra because they appear to demonstrate both the Biden administration's recommitment to US leadership in the region and Biden's acceptance that strategies of engagement with Beijing have failed. All of this simply reinforces the downward trajectory of Australia-China relations. Although Canberra may well be comfortable with this state of affairs, it should remain wary of locking itself into an adversarial relationship with its largest trading partner, while its alliance partner's ultimate strategy towards China remains a work in progress. Two key Biden administration officials, the National Security Council Indo-Pacific Coordinator Kurt Campbell and National Security Advisor Jake Sullivan, for instance, have noted that American strategy towards Beijing should seek to achieve not a definitive end state akin to the Cold War's ultimate conclusion, but rather a steady state of clear-eyed coexistence in terms favourable to US interests and values. Canberra needs to remain alive to the possibility the Biden administration may seek to attenuate the costs of extreme competition through a strategy of coexistence. In such a scenario, performative pushback leaves Australia vulnerable. And President Joe Biden will propose almost doubling the capital gains tax rate for wealthy individuals to 39.6% to help pay for a raft of social spending that addresses long-standing inequality, according to a number of people close to the White House. For those earning $1 million or more, the new top rate, coupled with an existing surtax on investment income, means that federal tax rates for wealthy investors could be as high as 43.4%. The new marginal 39.6% rate will be an increase from the current base rate of 20%. Now, a 3.8% tax on investment income that funds Obamacare would be kept in place, pushing the tax rate on returns on financial assets higher than rates on some wages and salary income. And cryptocurrency Ether pulled back sharply from a record high, and Bitcoin also fell, of course, amid speculation that US President Joe Biden's plan to raise capital gains tax would curb investments in digital assets. They dropped on Thursday after these proposals were revealed, but then, of course, they bounced a little further higher later. But while social media lit up with posts about the plan hurting cryptocurrencies and individual investors complaining about losses, traders and analysts said declines are likely temporary amid growing retail and institutional investor acceptance of digital currencies as a legitimate asset class. That's what everyone is talking about now, Chris Weston, head of research at Pepperstone Markets, a foreign exchange broker based in Melbourne, said, referring to the tax plan. And I think you may have some technical selling going on. Ether's been the poster child of movement. It's massively outperformed Bitcoin. And of course, stocks slid last week, the most in more than a month on the news, and the 10-year Treasury yield moved a little as well, but as we reported yesterday, that was pretty short-lived too. Now, the proposals could reverse a long-standing provision of the tax code that taxes return on investment lower than on labour, and Biden campaigned on equalising the capital gains and income tax rates for wealthy individuals, saying it's unfair that many of them pay lower rates than middle-class workers. White House Press Secretary Jen Psaki, asked about the capital gains plan in a press briefing last Thursday, said, "We're still finalising what the pay-fors look like." And Biden is expected to release the proposal soon as part of the tax increases to fund social spending in the forthcoming American Families Plan. Other measures that the administration has discussed in recent weeks include enhancing the estate tax for the wealthy. And Biden has warned that those earning over $400,000 can expect to pay more in taxes. The White House has already rolled out plans for corporate tax hikes, which would go to fund the $2.25 trillion infrastructure-focused American Jobs Plan. Republicans have insisted on retaining the 2017 tax cuts implemented by former President Donald Trump and argued that the current capital gains framework encourages savings and promotes further economic growth. It's going to cut down on investment and cause unemployment. Chuck Grassley of Iowa, a top Republican on the Senate Finance Committee and former chair of that panel, said of the Biden capital gains plans. He lauded the result of the 2017 tax cuts and said, "If it ain't broke, don't fix it." GOP lawmakers last Thursday called for repurposing previously appropriated unused pandemic relief funds to help pay for their counter-offer infrastructure plan. The group underlined opposition to tax hikes other than a potential revamp of the levies that go toward highway funding in a way that would cover electric vehicles. Biden will detail the American Families Plan in a joint address to Congress on April the 28th, and it's set to include a wave of new spending on children and education, including a temporary extension of an expanded child tax credit that would give parents up to $300 a month for young children or $250 for those 6 and older. Biden's proposal to equalise the tax rates for wages and capital gains income for high earners would greatly curb the favourable tax treatment on so-called carried interest, which is the cut of profits on investments taken by private equity and hedge fund managers. The plan would effectively end carried interest benefits for fund managers making more than $1 million because they wouldn't be able to pay lower capital gains rates on their earnings. Those earning less than $1 million may be able to still claim the tax break unless Biden repeals the tax provision entirely. The capital gains increase would raise $370 billion over a decade, according to an estimate from the Urban Brookings Tax Policy Center based on Biden's campaign platform. For $1 million earners in high-tax states, rates on capital gains would be above 50%. For New Yorkers, the combined state and federal capital gains rate would be as high as 52.22%. And for Californians, it would be 56.7%. Democrats have said current capital gains rates largely help top earners who get their income through investments rather than in the form of wages, resulting in lower tax rates for wealthy people than those they employ. And capital gains taxes are paid when an asset is sold and are applied to the amount of appreciation on the asset from when it was bought, to when it was sold. Congressional Democrats have separately proposed a series of changes to capital gains taxation, including imposing the levies annually instead of when they're sold. There ought to be equal treatment of wages and wealth, Senate Finance Committee Chairman Ron Wyden, an Oregon Democrat, who's the chamber's top tax writer, told reporters in a phone briefing last Thursday. On the Finance Committee, we will be ready to raise whatever sums the Senate Democratic caucus think are necessary. And Prime Minister Scott Morrison refused to bow to pressure from the US to use a global climate summit convened by President Joe Biden to announce an increased target to reduce greenhouse gas emissions. We are well on the way to meet our Paris commitments, Morrison told the summit, which laid bare the gulf between Australia and many of its key allies in how best to tackle the climate crisis. We'll update our long-term emissions reduction strategy for Glasgow, he said, referring to the COP26 Climate Action Conference to be held in Scotland in November. That leaves Australia aiming for a reduction of between 26 to 28% on 2005 levels of greenhouse gas emissions by 2030, an ambition about half the size of the revised US goal. Biden announced the US would aim to increase its Paris target to a reduction in emissions of between 50 to 52% by 2030 on 2005 levels. He told the 40 countries invited to the virtual gathering that there was a moral imperative to take action. The signs are unmistakable, the science is undeniable, but the cost of inaction, it keeps mounting, Biden said. The United States isn't waiting. Ahead of the meeting, US officials had said they expected all countries, including Australia, to come to the table with increased ambitions on reducing emissions if there was to be a chance of limiting global warming to less than 2 degrees Celsius and ideally close to 1.5 degrees on pre-industrial levels. It's insufficient to follow the existing trajectory and hope that they, Australia, will be on a course to deep decarbonisation and getting to net zero emissions by mid-century, a senior official told reporters, on condition of anonymity. The official said Australia now recognises that then is going to have to be a shift. If the running order at the summit was anything to go by, no one was truly expecting that shift would be announced anytime soon. Morrison was called 21st of 27 speakers, well behind China, Russia, Japan, the UK, South Korea and Canada. Despite the late hour in Canberra, Bangladesh, Brazil and Bhutan were all afforded the opportunity to speak ahead of Australia. State Department spokesman Ned Price later told the ABC that he wouldn't read more into the order of the sequence than is necessary. I don't think order was indicative of anything other than temporal sequencing, he said. By the time Mr. Morrison's turn came, Mr. Biden had already excused himself from the session. And when Morrison did begin speaking, some of his words were lost due to technical difficulties that plagued a number of segments in the summit. Mr. Prime Minister, I'm not sure we are hearing you, US Secretary of State Antony Blinken ventured before another long pause as Mr. Morrison was seen but not heard. And Morrison outlined his stated belief that technology trumps climate action targets. He did not commit Australia to achieve net zero emissions by 2050, as more than 100 nations have now done, including the US, UK, Canada, New Zealand, Japan and Korea. China has said it hopes to reach net zero emissions by 2060, an aspiration the president repeated at the summit, telling world leaders that to protect the environment is to protect productivity, and to improve the environment is to boost productivity. The truth is as simple as that, Mr. Xi stated, saying China was looking forward to working with the US and the international community to jointly advance global environmental governance. Technical glitches arose from the beginning of the summit, with US Vice President Kamala Harris's voice echoed as she kicked off the two-day summit by introducing Mr. Biden. During several leaders' talks, phone dialing bleeps intruded, and there were several times when stray voices talked over leaders. On net zero emissions, Mr. Morrison said the goal was to get there as soon as we possibly can through technology that enables and transforms our industries, not taxes that eliminate them, and the jobs and livelihoods they support and create, especially in our regions. For Australia, it is not a question of if or even by when for net zero, but importantly, how. In the run-up to the summit, Mr. Morrison announced investments of $225 million in regional hydrogen hubs and $263.7 million for carbon capture and storage projects and hubs. And told the meeting Australia aspired to produce the cheapest green hydrogen in the world. Mr. President, in the United States, you have the Silicon Valley. Here in Australia, we're creating our own hydrogen valley, Morrison said. And Morrison said future generations would thank us not for what we have promised, but for what we can deliver. And on that score, Australia can always be relied on. Earlier this week, the Prime Minister suggested that the desire for climate targets was strongest among urban elites when he said Australia wouldn't achieve net zero in the cafes, dinner parties and wine bars of our inner cities. And UK leader Boris Johnson indirectly addressed this vein of thought when he told the summit this is not all about some expensive, politically correct green act of bunny hugging. Jobs, jobs, jobs was also the mantra Mr. Biden was attempting to drive home as he addressed the summit, outlining a vision where workers were gainfully employed building a cleaner energy grid, capping abandoned oil and gas wells, and building the next generation of electric vehicles. The summit was an attempt, within his first 100 days in office, for the US to reassert itself as a leader and reliable partner in action on climate change, following a disastrous 4 years on that front under former US President Donald Trump, who walked away from the Paris Agreement. It is so good to have the US back on our side in the fight against climate change, said European Commission President Ursula von der Leyen. Samantha Gross, Director of the Energy Security and Climate Initiative at the Brookings Institute, said the summit had been a success for the US. I think the most important thing that this summit did was that it happened. It's a coming out party in a sense for the US, she said. A number of countries did come to the table with increased targets, including Japan, which announced that it aims to reduce greenhouse gas emissions by 46% by 2030 compared to 2013 levels. That's up from 26%. And Canada, who was aiming for a 40 to 45% reduction by 2030 on 2005 levels, up from 30%. As Gross said, there's time for other countries, including Australia, to follow suit ahead of the much-anticipated COP26 in Glasgow. If Australia doesn't, it may find itself slipping even further down the speaking order. And as Australia came under international pressure to lift its climate commitments ahead of that virtual summit, Morrison and his emissions reduction minister Angus Taylor have made a series of claims to defend the government's position. But the question is, do they stack up? Well, firstly, Morrison said, when you exclude exports, Australia has a reduction in our domestic emissions of some 36% compared with 2005 levels. Well, that's a new claim that raised the eyebrows of diplomats and analysts when Morrison first volunteered it at a business dinner last Monday. He repeated it to global leaders last Thursday. No explanation has been offered as to why this is a valid way to counter emission cuts. It has no precedent in the global debate. In the words of one analyst, it is a Trumpian misrepresentation of what the data actually says. Under international greenhouse accounting rules, Australia's national emissions are about 90% lower than in 2005, a point the government regularly makes to argue it is doing more than others. Now we'll come back later to whether that's true or not. If exports are excluded, you end up with a much deeper cut for a simple reason. You don't have to count Australia's liquefied natural gas export industry, which has grown from next to nothing to be a massive player over the past decade and is a massive energy user during processing. the increase in local carbon pollution from LNG production has cancelled out much of the fall in emissions from electricity generation, as Australians have embraced wind and solar. So the logic here quickly falls down. Why do some emissions released within Australia not count as domestic emissions? If Australia is not responsible for them, then who is? The countries that buy gas? Japan, China and Korea are unlikely to agree. Under this thinking, is the Western world responsible for emissions released, making the goods it buys from China and developing countries? Or is Australia suggesting the vast emissions connected to international trade are no one's responsibility? Here's another one. Australia is performing. We had a 19% reduction in our emissions since 2005, and that's better than many of the countries that are appearing at the summit. Now, those numbers are indeed correct, but the truth, as is often the case with carbon accounting, is more complicated. The government's claim seems to imply that some sort of structural shift is underway. In reality, emissions have only dipped in the 7 years the coalition has been in power, and the bulk of the reduction happened before 2013 under Labor. The overwhelming majority of this was due not to a reduction in fossil fuel use, but a substantial drop in land clearing and forest destruction in Queensland under changes brought in by the state Labor government, a decline in native forestry and forest regeneration in some semi-arid areas. There is some evidence the federal carbon price introduced by Labor, the Greens and Country Independents, was also having some impact on fossil fuel use in the 2 years it was in place before it was abolished by Tony Abbott. But if changes in land use emissions are removed, national carbon pollution has barely changed over the past 15 years, and official government projections released in December forecast only a 6.8% fall in emissions under current policies over the next decade, as other countries are increasingly ramping up commitments. Next, Morrison said, "We set commitments and we meet them and beat them." Well, that's also factually correct. But the first question to ask when somebody says that they met a target is whether the target is meaningful. Australia set itself incredibly generous targets under the Kyoto Protocol and Paris Agreement. Its first goal was an 8% increase in emissions between 1990 and 2012. Its second was a 5% cut between 2000 and 2020. On both occasions, expert advice suggested it should be doing much more for Australia to play its part. As set out above, Australia met those targets by counting massive emissions cuts that resulted from incidental steps taken by the Queensland government in reducing forest clearing. Those reductions were good for the atmosphere and the planet, but not driven by climate policy, and masked the need to rein in fossil fuel use, which continues to increase. And then Morrison said, "We're on track in terms of our commitment to Paris, which is a 26 to 28 emissions cut by 2030 compared to 2005. Now, before getting into whether this is true, it's worth noting that there is no scientific or policy rationale for the Australian target that was set in Paris. The US set a 26 to 28% goal for 2025, and Australia adopted the same numbers and just pushed it back 5 years to make it less ambitious. The Climate Change Authority had recommended a 45 to 60% cut based on scientific assessments, but that was ignored. Despite what Morrison says, official government projections released in December suggest Australia is not on track and was expected to be only 22% below 2005 by 2030. The bulk of the cut is due to a reduction in land clearing, but emissions are coming down from electricity due to the extraordinary fall in the cost of solar and wind power and state policies to support them. The government analysis found there were no significant national climate policies to cut carbon pollution from transport, industry or agriculture. All are forecast to keep emitting at current levels or to increase over the next decade. That said, most analysts believe the government projections will quickly be out of date due to the extraordinary influx of solar, which is happening much faster than most people expected. As Taylor says, roughly 1 in 4 homes now have rooftop panels, but the official evidence does not back Morrison's claim, and the solar surge is not due to federal policies. And then Morrison said, many countries make commitments, but none of them can claim the same record of achievement that Australia consistently has. Well, that's more of a stretch. Australia's recent emissions record looks better than some other countries like Canada and New Zealand, for example, largely due to a deal the Howard government demanded under the Kyoto Protocol. The so-called Australia Clause allowed it to take credit for historical changes in forest clearing. Take that out, and emissions across the rest of the economy have increased since 1990. An assessment by Climate Analytics found most countries had actually met their past targets and, unlike Australia, were on track to meet their overwhelmingly inadequate 2025 and 2030 goals set in the Paris Summit. Some have gone further. Britain has reduced emissions by more than 40% since 1990. Australia is miles from being a world leader and is sometimes bracketed alongside Russia, Brazil and Saudi Arabia as a climate laggard in expert commentary. Morrison then said, our targets for Paris are a 70% reduction in emissions when measured in respect of the size of our economy. Now here, the Prime Minister is referring to emissions intensity, how much is emitted for every dollar of GDP generated. According to an analysis by Climate Analytics, Australia's emissions intensity is likely to fall by 64% between 2005 and 2030 if it meets its current targets. Now that may sound big, but basically it means emissions have been reduced a bit while the economy has grown a lot. Australia's performance here is not remarkable. Both the US and the European Union will record a 70% fall in emissions intensity over that time if they meet their goals. And then Taylor said Australia per capita is setting a goal of a 50% reduction. Well, as with emissions intensity, this is not a formal target but the government's 2030 goal. It's forecast to translate into a 47% per capita cut as the population grows and emissions reduce. Again, the number sounds more impressive than the reality. Australia's reliance on fossil fuels means it has long had one of the highest per capita emissions levels in the world. The Investor Group on Climate Change found even if it met its 2030 target, this placement would not change much. It would still have the third highest per capita emissions in the G20, behind only Saudi Arabia and Russia. And Morrison also said the trajectory of any net zero outcome is not linear. Anyone who thinks it is, I know, doesn't get it. The way technology works is there is a long lead time into its development and commercialization, and once the technology is in place, you can see a massive transformation. Well, that claim is in step with the government's gradual technology, not taxes approach, which includes a commitment to spend $19 billion over a decade on clean tech solutions, with an expectation private investment will follow. This sum is significantly less than some other countries are spending. For example, Germany has committed $14 billion to hydrogen alone, and most of it is just a continuation of existing funding to clean energy agencies. The Prime Minister's argument on emissions trajectory is at odds with what the Intergovernmental Panel on Climate Change and the leaders of major countries says it's necessary to avoid the worst of the climate crisis. They agree cuts shouldn't be linear, but they say they must be front-loaded in the next decade. That is the entire rationale for Biden's summit. And Morrison's statement also ignores multiple studies, including some by Australian government bodies, that have found rapid cuts are possible now, particularly in electricity and transport. And Morrison said, when is not the question anymore? How is the question? Well, actually, it's both. When is at least as important as how the IPCC found global emissions needed to fall by 45% between 2010 and 2030 to give the world a chance of limiting heating to 1.5 degrees Celsius. Developed countries, which carry historical responsibility for most emissions, are expected to carry the greatest share of this. And Taylor said, our ambitions are ambitious. There's no doubt about that. Well, here the numbers really do tell the story. The US announced on Thursday last week that it had a target twice as big as Australia's by 2030, a 50 to 52% reduction compared to 2005. Canada set a 40 to 45% target, and Japan a 46 to 50% target, but with a 2013 baseline. The EU has a 55% 2030 reduction target compared to 1990 levels, and Britain is also going for 68% over the same time frame and 78% by 2035. Campaigners say some of those targets do not measure up to what the science demands to keep limiting heating to 1% in play, but they are all significantly more ambitious than what Australia proposes by any measure. More than 100 countries have now set net zero emissions goals for 2050, but Australia continues to resist due to internal political conflict over the issue. Morrison's position is he says would preferably get to net zero by then. In a briefing with reporters ahead of the summit, a senior Biden administration official made the US position clear. Our colleagues in Australia recognise there's going to have to be a shift, the official said. It's insufficient to follow the existing trajectory and hope that they will be on course to deep decarbonisation and getting to net zero emissions by mid-century. And so the point I wanted to make from this show is that Biden is beginning to push the US in quite a different direction from where Australia is. And whether you look at finance policy, trade policy, or indeed climate change, we are going to be left further and further off the pace, and the gap between the political spin that Morrison and his team trots out and the reality that we need to achieve and must achieve is getting ever wider. The difference now is, of course, that Biden is leading the charge, and that means that we're going to get further and further behind the US, and that could spell trouble for us in Australia. And remember, of course, relations with China are also souring further. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.